Okay, this video is going to go along with Chapter 15, Section 2. Looking at format for an income statement. Calculating the missing information is this first section. And how to do this is you're looking at your net sales, subtracting your cost of goods sold, and you're looking at your gross margin. Then in order to get your net profit, you should take your gross margin and subtract your operating expenses. Okay? And again, as you're looking at the various information, if they give you, in this particular example number 2, you're looking for the cost of goods sold and your operating expenses. So again, you're just moving your data around by subtracting what you need to. So if this minus this number is this, we can swap those out, remember, by subtracting your gross margin from your net sales to get the difference, which is your cost of goods sold. And the same thing over here. If you're missing your operating expenses, if you know your gross margin and your net profit, you would just subtract your net profit from your gross margin to get the difference then of your operating expenses. So it's just simply maneuvering the information around. Here you're looking for your gross margin. They give you those two. So you're just simply subtracting cost of goods sold from the net sales, get your gross margin. Once you have that number, subtract your operating expenses, and you get your net profit. So let's just look at one more of those, make sure we have it. Number 4, they give you net sales, they give you the cost of goods sold. So it's simply putting it into your calculator and getting your answer subtracted. And then once you have that, you subtract your operating expenses and you get your net profit. So again, it's pretty straightforward, adding or subtracting as needed. In number 12, the example is that you're asked to give net sales. The information provided for the third quarter, Microtech had a gross sales of $315,450. So we're going to write gross sales. So we have $315,450. Sales and returns allowances, $23,100. So we're going to subtract that. So we're going to have less these items. So we have sales and returns. So we're going to subtract that of the $23,110. And discounts, sales discounts. Subtract that. Okay, so we have gross sales. We're going to subtract the things we need to subtract, and then we're going to have a net sales, because gross and net is the difference between the things that we need to subtract, whatever they are. They vary from store to store. So we subtract that 0, 5, 6, 3, 7, 2. Okay, so pretty straightforward. Just get the information you need. Again, I always like to underline it, but don't have to do it that way. And just simply subtract everything else you need to subtract. For the next example I wanted to talk you through is we're going to use 14 because you're going to do 15 as part of your homework. But you're setting up a balance sheet, and they provide the information for the Jefferson Airplane Parts Company. Assistant manager constructed an income statement with vertical analysis, so that's up and down, right, for the first quarter of 2014 with the following information: gross sales, sales discounts, beginning inventory, ending inventory, and purchases, total operating expenses, and income tax. Okay? So they've given you this information. And then as the part B, you're going to do a comparative statement for the next year. All right? So this is the information they've given you. It's pretty straightforward information. You have to set it up. So let's see how that would look like. So that information transposed to an income statement would look like this. Remember, they asked for the comparative. Okay? So they're giving you then, based on net sales, these numbers. Okay, so net sales was the 100%, so that's what it's supposed to be based on. So how do these numbers compare? Remember, it's going to be part out of the whole. So 43,500 divided by to get your percent. Okay, same here. Obviously, that's bigger than you're basing it on net sales. Okay, so you're comparing all of these numbers then based on net sales. This is the information they gave you. Okay, yours needs to look fairly similar to this. This is pretty much standard form that they showed you in the text. This is how it should look, or very close to it. Okay, so you're just taking the information they gave you and plugging it into the form. All right. And then in part B, they're doing the comparative between the first and second quarters. Okay. And again, they're doing the amount, percent change between the two. Okay, so this is the increase or decrease. Remember, a decrease is going to have the brackets. It's standard SOP for a decrease. That's how you set it up. So here's one, here's one. You do the percent decrease in the same brackets to show that it's a negative or went down. Okay, so it's just pretty much standard form. Listing the information and then part out of the whole. Okay. And then this, remember, it's going to be a difference between these two numbers. That's what these are. Okay. And then it's going to be the difference over the original amount. Okay, so difference over the original amount. Get you those. Okay, so you're going to have 15, which is going to look very similar to this. They're comparing years instead of quarters. But again, your information should look very much to what this is. And it is in the back of the book for help. So if you need that, and you say, well, how is this supposed to look? Use the text as a reference guide, and you can also compare it to the information.